Hey folks, Dan Furrier here with your market update. So if you watched yesterday's video and the day before, I basically was saying, hey guys, it's a great time to maybe stick your toe in the water because mortgage rates are getting that much better. And you also see a lot of house prices are coming down a little bit on the sales side of things, and the robustness, how many people are out there bidding on properties is really plummeting. It's going from about 50 bids to about 3 or 4. So that's a big change in the market. I'm not saying that the market is bad. It's cooling off quite a bit, and that was the Federal Reserve's goals. So today we're going to talk about, or what everybody is talking about, is inflation and recession. So I want to put a lot of this into context for you guys out there that are looking to, hey, should I buy a house? Should I rent? What should I do? Well, my goal is to basically make sure you guys are knowing what's going on in the real estate market. And then the biggest piece of that thing is, what kind of rates are you going to get? Because yeah, you qualified at 2.5, but maybe you don't qualify when the rates are 5%. So let's tie all this together. So what I want to go over today is some inflation numbers with you and the recession. I still say we're in a recession, but the Federal Reserve people that sit on that board still are denying it. So we're going to get to that and all this next. So if you find value in my channel, all I ask you to do is give us a thumbs up, subscribe down below, and if you like, hit the bell. Every time I post a video, you get an alert. So let's get over to the headline news. The first piece of the headlines I want to explain to everybody is markets are moving fast and big. Okay, we saw, and you'll see here in a minute, where mortgage rates basically spiked yesterday. And we've had some stability in the last couple weeks, but yesterday it was kind of out of control. So if you haven't had an application in, you can't capture those low rates because a lot of times we'll get that dip and then it'll spike right back up. But what's happening? Let me put a lot of this into context, what's going on. So I don't really like talking political on this channel because I get nothing but hate speech and then everybody starts fighting in the comments down below. But there's a reason why I do this. It's basically because of, let me show you the headlines that we have right now that's causing the markets to move. The biggest culprit behind this is right here. U.S. Treasury yields move higher ahead of a new economic data. Well, there's not much economic data out right now, but the biggest culprit right now is investors await new economic data and continue to monitor geopolitical tensions between the U.S. and China. Okay, so that's one of the biggest pieces of the equation right now, that people are really concerned of what's going on. Now what's going on with the US and China. So what I explained yesterday is, when there's tensions in the markets, what happens is people get out of the stock market and stop putting their money into bonds. When they move their money into bonds, one piece of that puzzle is mortgage bonds. And as they drive more money into that area, it drives up the prices and drives down the yields. Okay, so what we're having here is the volatility of all of this actually compounding the adjustments in mortgage rates. Okay, so that's one piece of the puzzle. The next piece of the puzzle is when CNBC wants to get on everybody's nerves a little bit or spook the markets, they bring in a federal chair member. His name is Bullard, and he never has good news to say about anything. And the headlines right here is, Fed's Bullard sees more interest rates hike ahead and no U.S. recession. Great, fantastic headlines, but guys, we're in a recession. Don't care what anybody says. I look at 3 big components, and all those components are telling me we're in a recession. But let's go down and see what he's actually explaining that he thinks that the Fed might do and his thoughts on everything. Okay, St. Louis Fed President James Bullard said he expects another 1.5% rate increase this year. Okay, I'm probably with him on that one. We're not in a recession right now. To some extent, a recession is in the eye of the beholders. Well, most analysts, most economists are saying we're in a recession. You and those in Washington are saying we're not. So who's the beholder? I'm on the beholder side that we're in a recession. Okay, markets are pricing in another rate hike of 50 basis points in the September meeting. And the chances of a 75% basis point increase is increasing day over day over day. Okay, so I might have a little bit of some good news for you on the inflation front. Look at this chart right here. What this chart is if this was a stock, you'd be pretty much throwing up, but it's not. It's oil. Okay, let's go up through here. Okay. Crude oil. So we're at $94.6 a barrel right now. Where were we in the last reading on inflation? Well, we go back to this date right here in June where we peaked, and you can see that high number is 123.18. Okay, so from June to basically July, we've seen a 23% drop in oil prices. Okay, maybe we're not seeing that much at the pump, but oil prices are dramatically decreasing. Thus, what's our next reading going to be? So we know on the inflation front, the biggest piece of that puzzle is energy, especially fuel at the pump. This is helping tremendously. We have oil down 25%. So my expectations of the next inflation number is going to start cooling off. So that's going to mean the Fed's going to will take their foot off the brake a little bit. So I'm expecting the Federal Reserve in September to raise the federal funds rate 50 basis points. And then at that point, a lot of things are going to continue to settle, especially if we see this oil continue to plummet. That's going to cause prices all over the map to start to decrease. So based on all this information that we have today, what's going on with mortgage rates? Well, let's go over to rates first, and here's where we are. So you can see right here, if you didn't lock in yesterday, we locked in everybody that we possibly had in the morning. Well, if you didn't lock, rates are now 0.25% higher than where they were. Okay, so I've asked a lot of people to send me their loan estimates in, or their locks, or their quotes from other companies, and we got bombarded with people yesterday. And I know by 10 o'clock in the morning, we already had 6 people locked in at better terms. But I show you this chart because these are not my rates. These are not any individual mortgage company's rates. These are mortgage rates posted by Mortgage News Daily on a daily basis. They surveyed lenders all over the country and said, hey, if you had this person, this client, here's the scenario. You had a client that's buying a $500,000 home, 740 credit score. They're looking for a mortgage, and it's a single family home. It'll be their primary residency. What would your rate be? So they send out surveys to everybody out there in the big mortgage companies, and they send their quotes back, and here's what the rates look like. So you can see right here, you have the 6 most used mortgage programs, and you can see basically across the board, other than Jumbo and ARMS, rates are up between 0.2. On average, you're about 0.25% higher than where we were the day before. So if you missed this little dump in the market, you missed it. Will there be another time that it comes back? Well, you have to be prepared. How do you prepare? You make sure you get your applications into us, and I'll give you all that information at the end. But based on the news today, what's going on with the MBS market? Well, the MBS market was down 80 points yesterday. Okay, and today we're down 23 points. What does this mean? I'll put it in quick context. This is what's happening to the price of the bond of a mortgage-backed security that sells on Wall Street. Okay, how this works in its simplest terms. If this number, the price goes down, the rates or the yield on this goes up. Well, because this is a mortgage bond, that means your mortgage rate's going to go up. Okay, so that means we're also going to see more of a correction today in mortgage rates, and they're going to continue to go up. So if you're still sitting on the fence saying, hey, I got locked in, these rates are still showing lower than what I have, I ask you to send me your loan estimate, call in, email us, do everything and anything you can to try to help save yourself some money. So the best way to get a hold of me and my team is go to therateupdate.com. It's right here. It's very simple. You can reach out to us either by phone, you can schedule a calendar meeting, or you can even chat with us. We're live. So just check out therateupdate.com. All my description is down below to how to reach to me on cell phones, emails. Check out our newsletters. Subscribe to our newsletter. It popped up to ask you to subscribe. You get a newsletter every morning. It's free. I don't sell the data. It's just for you to use. I would suggest if you're a mortgage person or a realtor, I would highly suggest you subscribe. If you're a consumer, just watch this every day until you're ready or prepared to get a mortgage to buy that first home. Reach out to us and let us walk you step by step of the way through the process. So thanks for watching, guys. Again, if you liked my videos and you find value, all I ask you to do is give us a thumbs up, subscribe down below. Look forward to seeing you next time. God bless. Take care.